Hey, aloha folks. Thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this channel, we look primarily on dividend companies that are great companies to invest on. So if that's something you're interested, definitely hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on these videos that I put out. On this video, we are going to look at a viewer request. So if there's something that you're interested in finding a little bit more about, definitely put it in the comments and I'll definitely take a look at it. As always, please remember this is not financial advice. This is just me sharing. With that said, let's take a look at this company. So the company that I'm looking at is Kroger. Ticker symbol is KR. This is a company that engages in the operation of supermarket and multi-department stores. So it employs about 420,000. So many of you probably shop in this supermarket. I shopped on it a couple of times. Pretty good. I like it. So if you're a shopper, maybe that's something that you can start investing on. Now let's take a look at Seeking Alpha. Now, if you look at Seeking Alpha for the year, this company is up 17%. But if you look at the 10 years, look at that, up 326%. Yeah. So in the 5 years, it's up 132, and then again in the 1 year, it's up 17%. Year to date, it's 11%, and then 6 months, it's down -8. So if you look at now, let's take a quick look at Yahoo Finance. Yahoo Finance, you can see, so if you're looking for free places to look at your stocks, Yahoo Finance is a great one to take a look at. For the market cap, it's about 38 billion. You can see the payout rate, PE ratio is about 17, and then you can see the volume right here. So the volume is 9 million, average volume is about 5. 52-week range, you can see the high of 62 and then the low of 38. Now if we look at the performance outlook, you can see it's pretty bullish. Now looking at the earnings, you can see it's been beats the past 4 quarters. This one is really they did really good on that one. And then financials, you can see from 2020 all the way to 2022, you can see an upward trend. The revenue is about 137 billion, earnings about 1 billion. Looking down a little bit more, you can see the trends between the holds, strong buy and a buy, rating between a buy and a hold. And then the price target is currently at the time of this video is $50, average about 53. So pretty discounted price in my opinion. Now if we go to NASDAQ, based on their analysis, there's 19 of them. They're rated as a buy, and you can see the firms that are making the recommendations. You can see like Citigroup, JP Morgan, you can see Wells Fargo, and so on. Now let's swing real quickly to Webull, and based on their analysis, there's 27 of them. They rated as a hold. And then you get strong buy of 18%, a hold of 55%, and then a buy of 7%. Their price target is a high of 75, an average of 54, and the low of 43. Now let's swing to bar chart based on their price target. Pretty similar, it's high of 75, a mean of 52, and then a low of 38 with the analysis rating of hold. So you can see it hasn't changed for the past 3 months. It's been a hold. You're looking at the breakdown currently, 10 holds, 4 strong sell, and then 4 strong buys. So now let's quickly take a look at Simply Safe Dividend. Based on their dividend safety score, they're rated as 71, which is safe. The dividend yield for this is 2.06. Then you got your market cap, which is considered a large cap of 37 billion. Going down to the key metrics, payout ratio is about 21, and then you got your increased dividends during a recession, And then if you look at the dividend growth, you can see the last 10 years, 14%, which is very fast. Last 5 years, 12%, which is very fast. And then the latest, 24%, which is very fast too. You can see upward trend, which is always something that I always look at. From 2006 on, it kind of had a little stagnant over here, but then after that, it just skyrocketed. 15 years of uninterrupted dividend without a reduction, and 15 years of growth. So pretty good. If you're wondering when are you going to get paid, you get paid quarterly in the months of March, June, September, and December. Your annual payout would be $1.04 per share, which breaks down to about 26 per quarter. Yeah. Looking down a little bit more to some of the financials, you can see right here, you can see the earnings payout ratio, and then you can see a little bit more sales growth, total sales billion, return on invested capital, you can see 14% in the last 12 months, return on equity 26% in the last 12 months. This is nice. I like to see this going up. This one is kind of up and down, but it's nice to see that it went up. Now let's take a look at simply Wall Street based on their share price versus fair value. Their fair value is 72 and their current price right now is $50, which they calculated 30% undervalued. And this is based on their calculations using a discounted cash flow model. If you look at the overview, you can see some of the positives trading at 30% below. Earnings are forecast to grow 3%, pays a reliable dividend, and some of the risks you can see as a high level of debt. Now let's swing to Robinhood. At the time of this video, it was down 2%. For the week, it's up 3%. For the month, it's up 7%. 3 months, it's even actually. And then for the year, it's up 18%. And then you got your 5 years, it's up 141. Now, if we look at their analysis, you can see right here, based on their analysis, they rated as a buy of 28%, a hold of 52%, and then you got your sell. And then you look further down the line, you can see their fair value is about $48, and then the earnings actually you can see was 90% in their estimate. Definitely something to think about. I like the stock. I think it's great, solid company. I wouldn't want it to be one of the key players in my portfolio, I think. But if I'm looking for a company like this, definitely this would be one. Another one that I would think of would be Walmart, but Walmart's a little bit more pricier. So definitely this one would be a great one, in my opinion, for something to kind of give great, pretty solid dividends. Yeah. All right, guys, that's pretty much it. Thank you so much for watching. Hope you like this video. Give it a thumbs up. Share it to those people too if you know somebody that wants to start dividend investing. As always, please remember it's not financial advice, and you definitely check out some of the videos that I put out as well. There's other videos with great companies that, in my opinion, are great companies to invest on. With that said, thank you so much. Please be safe out there. Stay cool. Keep investing. And I'll catch you guys in the next video, right? Take care. Aloha.